Attacq also released its annual results. On a like-for-like basis, net operating income has been lifted by a tepid 1.4% as the impact of the pandemic lingers. Distributable income in the meantime fell close to 36%. Distributable income from the group's local operations, however, managed a near 23% climb as rental collections and occupancy levels improved. No dividend has been declared and the board has resolved not to provide guidance for the 2022 financial year due to the uncertainty that COVID brings to the operating environment. Company CEO Jackie van Niekerk joins us with greater perspective on performance and what it spells for any future growth. Thank you for joining us, Jackie. Now, the group has decided not to provide guidance for this financial year that we are in now. Is that a signal that Attacq may not be out of the woods yet?
It was definitely a long board discussion we had in not, declaring dividends for this year. We just felt it's prudent capital management. We've been on a big drive over the last 18 months to really optimize our capital structure, reduce debt, and be very prudent with our capital reserve. And we've built up a nice liquidity base. We've just felt with the uncertainty, and when we were making this call as a board, we were still in level 3, and there's a potential level 4 lockdown. And it's been quite evident with the impact of lockdowns have got a direct impact in our income statement by providing deferrals to our retail tenants, which we also feel is vital in supporting especially our small SMMEs. And with all of the uncertainty, we felt it's better prudent capital management to retain our capital and apply it when necessary, and also potential downside headwinds that we could face during the year.
Talking about those rental deferrals and also the rental discounts that you have provided, those have come in lower during this period. But you do still have some clients that do still need those rental discounts. We're talking about restaurants, gyms, and those who are in entertainment. And I'm just interested now, with South Africa having moved to adjusted level 2 of lockdown, are you having any kind of conversations with those clients on reducing those rental discounts and deferrals?
At this stage, that we take a very pragmatic approach. So if your trade has been significantly impacted by lockdown restrictions, we would definitely allow a conversation with our particular tenants. For example, the movies and entertainment, they've got capacity constraints that continues with level 2 lockdown. So we definitely would have conversations with those particular tenants. But at this stage, with restaurants open up and able to trade and sell liquor, it is definitely much more of a positive conversation we currently have with our tenants. So it's very much a pragmatic, a sector-by-sector approach, but really the long game is to create a sustainable and viable options for ourselves and for the tenants and find a medium landing.
Yeah. Jackie, your South African portfolio performing quite well. We're talking about Waterfall City and the rest of your South Africa portfolio, but your distributable income really put under pressure by your other investments portfolio, largely due to not receiving a dividend from Mass. But Mass now is recovering and has declared a dividend for their financial year end. And I'm just interested, with this selling down of your stake in Mass, do you have any regrets or any reservations about selling down that stake to the level that it is in now?
A good question. We considered Mass as a very good currency for us, a very liquid asset, quite easy to trade, the Mass share. And we felt with the Mass share, even before trading, it was such a small component of our balance sheet. And really the future of Attacq sits in Waterfall and the development thereof. So in order for us to create a capital structure and firepower for us to unlock these developments within Waterfall to really give our shareholders long-term growth, the Mass sale was a prudent action for us to offload and reinvest that capital into our debt structures as well as in our development pipeline that we have announced that we've got 5 buildings under construction at this stage.
Yeah, and you have laid out your plans to sell the rest of your Africa retail investments. And I'm just wondering, with that offloading, where are negotiations at this point?
It's slow, and we have definitely seen quite a lot of headwinds, not only in managing these type of assets throughout COVID. economical differences in these countries. So we definitely face headwinds. There's quite a lot of conversation that's happening with particular potential suitors for these assets. But as we've said this morning, it could be 6 months, it could be 2 years. It's definitely a not easy assets to dispose of because of COVID and the climate, the economical climate that these assets are situated in.
Yeah, and just lastly, Jackie, Waterfall City seems to be the crown jewel in your portfolio. And just paint some color for me in how you plan to leverage that to get to a point where you are able to pay a dividend in the next financial year.
Well, Waterfall City, the land is paid for. We sit with ungeared land. So the exponential growth that we potentially could provide our shareholders over the next few years, as we all note, that property is a long-term game. Building these buildings quite take time, and unlocking this true value takes some time. But with the ungeared land, with the opportunity of consolidation and bringing people into Waterfall, not only focusing on one sector, but on multiple sectors, I think we're hitting the market in multiple ways, and unlocking future value over a period of time. I think the economy at this stage is in a quite low lull. We've had riots, we've had a lot of challenges in our country, sociopolitically, and we've really seen how Waterfall has stood the test of time. We have thankfully not been hit by any, riots. So we've got a safe and secure environment. We've seen how our rentals are growing in Waterfall over time. And we really feel that we are very well positioned with our liquidity in our balance sheet. Our land is paid off. And the performance that we have seen over the last 6 months, that we will continue to unlock further growth for our shareholders.
Right, indeed, and we have seen the value that South African portfolio has provided for the company. Thank you very much, Jackie van Niekerk, CEO of Attacq.